Let's talk about the pros and cons of using a doctor mortgage. First, we'll talk about the advantages of doctor mortgage loan. The main advantage here is that it allows you to use your money elsewhere, and may allow you to get into a house earlier than using a conventional mortgage. Why is this? This is because you have to make little to no down payment. Now, sometimes it's 0%, but often no more than 5% of a down payment. That's just a lot less money than 20% of a down payment, especially with today's inflated housing prices. But the beautiful thing about a doctor mortgage loan is that despite not putting 20% down, you don't have to pay private mortgage insurance or PMI. This is that insurance that protects your lender from you defaulting. It doesn't actually do anything for you. This is not insurance that helps you. It is not good to pay it. And with the doctor mortgage loan, you can avoid a big down payment and avoid PMI. So that's a great benefit. They also usually give kind of special treatment to your student loans. They recognize the fact that if you're in an IDR program and have tiny payments, that's all they consider when determining whether you qualify for the loan is the payments that you're having to make right now, rather than the fact that you owe $250,000 or $500,000 in student loans. The other nice thing about a doctor mortgage is they'll just take a contract. You don't even have to begin working. You don't have to have pay stubs. You don't have to wait 2 or 3 months to get pay stubs. A contract is adequate. And so you can actually buy the home before you even have the job. Those are all the advantages. Now, naturally, there are disadvantages to using a doctor mortgage loan. Probably the worst one is the fact that because you don't have to have a down payment, you might be encouraged to buy a house when you shouldn't buy a house at all. It generally makes sense to buy a house when you're going to be in it for at least 5 years. But if you don't have a down payment, some people are like, oh, I'll just buy a house. And then they come out behind once they look at all the other expenses of home ownership. It also might encourage you to buy more house than you otherwise would or should, because you don't have to come up with that down payment again. Right? It's a little bit of a moral hazard when that comes up. Now, remember, moral hazard is an economic term. I'm not saying anything about your morals. It's just an incentive to do things that maybe you wouldn't otherwise do. But the main disadvantage here is that you don't have a down payment, right? So if you have to sell quickly and the price has dropped, you have no protection, right? You've got to bring cash to the table to get out of that house. And so that can be a frustrating thing to do, especially if you haven't been in there very long. You're also, of course, going to have higher payments, right? If you put a down payment of 20% down, well, your payments are based on 80% of the value of the house. If you put nothing down, your payments are based on 100% of the value of the house. So your payments are going to be at least 20% higher. In reality, it works out that they're slightly higher than that because you typically have a little bit higher fees and a little bit higher interest rate when you get a doctor mortgage loan. That's not always the case, but the vast majority of the time, it's going to be. And then, of course, for most doctors, you've already got a ton of debt. You probably have some student loans. You might have a practice loan or a partnership loan, something like that. And now you're adding on a big fat mortgage loan. So be careful. Don't get yourself over leveraged. But it might make sense for you to use a doctor loan, especially if you've got a better use for your money, that you do have, whether that's paying off credit cards or a car loan or maxing out retirement accounts or whatever. Paying off your student loans, whatever your other uses for money are, you may find that a down payment is not the best use for your money. That's when it makes sense to use a doctor mortgage loan to buy a house that it's right time for you to buy anyway.
The hosts of The White Coat Investor are not licensed accountants, attorneys, or financial advisors. This podcast is for your entertainment and information only. It should not be considered professional or personalized financial advice. You should consult the appropriate professional for specific advice relating to your situation.